Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filing so you don't have to. Today we are diving into the world of chocolate, caramel, and salty snacks with the Hershey Company's 10K report. Will this be a sweet story or will we find some sour surprises? Let's unwrap it and find out. First things first, this report gives us the full scoop on Hershey's business performance for the entire year. Think of it as their annual State of the Union address, but for investors. Also, some parts of another document called the proxy statement are included, giving a more detailed view. So, what does Hershey actually do? Well, they are a global confectionery, which means sweets, leader. They're huge in chocolate in North America, a leading snack maker in the United States, and a big player worldwide. They sell their stuff under more than 90 brand names in around 70 countries. That's a lot of chocolate kisses being spread around the globe. To understand their business, Hershey divides its operations into three main parts, which are also called segments. First, there is North America Confectionery, which is all about chocolate and non-chocolate sweets in the United States and Canada. This also includes Hershey's Chocolate World stores. Then there's North America Salty Snacks, responsible for Skinny Pop popcorn, Pirate's Booty, and Dot's Homestyle pretzels in the United States. Finally, there's international, covering operations outside of North America in places like Mexico, Brazil, India, and Malaysia, and export markets like Asia and Europe. Throughout the year, Hershey acquired the Sour Strips candy brand, and in the prior year, they expanded their manufacturing capacity from Weaver popcorn, demonstrating continuous efforts to innovate and expand their product offerings. Hershey's main customers are big distributors, grocery chains, drugstores, and places like wholesale clubs and convenience stores. Basically, anyone who resells their products to us, the consumers. A huge chunk of their sales comes from one customer in particular, McLane Company, which distributes a lot of Hershey's products to Walmart and other stores. Alright, let's dive into the numbers. On the stock market, Hershey's common stock is under the symbol HSY. The Class B common stock does not trade publicly as of the end of the year. The closing price of HSY was $169.35. The company has consistently paid dividends, which are like cash bonuses, to its stockholders. In 2024, they gave out about $1.1 billion. Now let's look at how Hershey performed financially in 2024. Net sales were about $11.2 billion, a slight increase from the previous year. They made a gross profit, which is revenue minus the direct cost of making their products, of $5.3 billion. However, as prices for resources like cocoa went up, margins were squeezed. Let's break down what made the difference between the years. Higher prices helped their sales, even as they sold a lower quantity. Some of the international markets did well, while consumers sought more of their core US confectionery products. Commodity costs were volatile throughout the year, including cocoa impacting margins, although they were able to use hedging to help offset much of the increases. Breaking down the results of operations per segment, the North America Confectionery segment saw a slight decrease in sales, but volume declines were offset by higher prices. North America Salty Snacks saw increased sales from pretzels, even with prices slightly decreasing. The international sales decreased, slightly impacted by foreign currency exchange rates. Hershey seems to have plenty of cash on hand, about $730 million, which should be more than enough to cover their immediate needs, like expanding the business and paying dividends. Their main goal with their cash is to keep growing, whether that means buying other companies, investing in new equipment, or returning money to shareholders. Of course, every company faces risks, and Hershey is no different. The report lists a few things that could cause problems. For one, they have to maintain a good reputation and product quality. If something goes wrong with their products, it could hurt their brand. Disruptions to their supply chain, whether from natural disasters, pandemics, or even something like a labor strike, could also affect their ability to make and deliver products. Cybersecurity is also important to the business. The company has a comprehensive cybersecurity program in place for assessing, identifying, and managing cybersecurity risks. They continuously monitor and update their information technology networks and infrastructure to prevent, detect, address, and mitigate risks associated with unauthorized access, misuse, computer viruses, and other events that could have a security impact. Hershey is also facing some headwinds that could affect performance in the near future. They need to keep up with changing consumer tastes and navigate rising prices for raw materials like cocoa and sugar. They also have to deal with competition from other snack companies, which can put pressure on their sales. Hershey's is committed to sustainability with a focus on responsible citizenship that started with Milton Hershey. Their strategy, Our Shared Goodness Promise, emphasizes empowering people, working with farming communities, protecting the environment, and supporting children and youth. This all sounds nice, but they are also facing challenges from climate change and other environmental impacts, and increasing legislative and regulatory efforts to combat potential causes and adverse impacts of climate change. There have been some leadership changes. Andrew Archambault was appointed president, US Confection, and Veronica Villasana was appointed president, Salty Snacks. These new leaders will help lead the company going forward. It should be noted that the company is subject to certain legal proceedings and claims arising out of the ordinary course of their business, which cover a wide range of matters. While it is not feasible to predict or determine the outcome of such proceedings and claims with certainty, the opinion is that these matters, both individually and in the aggregate, are not expected to have a material effect on financial results. Now let's put all of this into perspective. Hershey is a well-established company with iconic brands and a strong position in the confectionery market. Their long-term strategy, focusing on brand building, market expansion, and cost optimization, is a solid plan to continue into the future. However, there are some challenges to consider. Rising commodity costs, especially for cocoa, could squeeze profit margins and require them to raise prices, which might turn off some customers. Also, they face a lot of competition in the snack market, and they have to keep innovating to stay ahead. It looks as if they have had some recent issues of meeting financial expectations and had to offset those. From a valuation standpoint, the Hershey company trades at a premium compared to its peers, reflecting its brand strength and consistent profitability. A reasonable target price range reflecting slower growth expectations and risks would be $160 to $170. Therefore, my final conclusion is cautiously neutral, leaning slightly bullish. Hershey is facing some challenges, but also is positioned well to continue to succeed. Thanks for watching. If you enjoyed this corporate breakdown, be sure to subscribe and hit the notification bell so you don't miss any future financial dissections. What company should I break down next? Let me know in the comments.